We got a sell-off on our hands after yesterday's record-breaking rally. The Dow adding more than 1,000 points. Joining me now, president and founder of Atomic Wealth Advisors, Mark Avalon. Mark, thanks for joining us. You know, it's been a volatile ride to say the least. Do you think the market's found the bottom yet, or do we still have to find it?
Well, I think it's going to be rocky from here. It'd be nice to know with certainty that the Christmas Eve debacle was the last time we're going to see a 500-point move, but I don't think that's going to be the case. All you need for this to continue is for Jerome Powell to say the wrong thing, or for China and President Trump to have some friction in their trade talks, and the markets are going to be very skittish. It's really disappointing because at the core, the underlying U.S. fundamentals are strong, but that's not what the headline is. That's not what's grabbing investors' attention right now.
The White House Council of Economic Advisors, the chairman, Kevin Hassett, talked about all this yesterday. Right. He was on with Charles Payne doing the Varney & Company show. Listen to what he said.
I think that the president's perspective there, that if the Fed is lifting rates, it's because they think the economy is really solid. Well, it's really confirmed in the data. That's, you know, I talk to the president almost every day about what's in the data. And if you look at, you know, Secretary Mnuchin was calling around to the banks a few days ago. If you look at the anecdotal reports, we're looking at probably the best Christmas ever.
Okay, so he said the economy is safe. He said that the Treasury Secretary called the banks as if there might have been a problem with liquidity that we didn't know about. And he also said that Jay Powell at the Fed, his job is safe.
Well, calling the banks in the manner that happened was clearly unorthodox, and the market reaction was pretty clear. It was negative across the board. You know, there are systems in place and processes that this administration could follow, which would give Wall Street a better indication that they're in charge of things and know what they're doing. Look, Jay Powell is looking at the good economic data, and he's turning it into a negative. We finally are helping the middle class with wage growth over 3%. That's the first time we've had that in over 10 years. And that should be good news. 3.7% unemployment should be good news. And relatively strong GDP in 3% range should be good news. Unfortunately for the stock market, because of the way the Fed is reacting, it's being turned into a negative. And when you couple the Fed actions with slowing growth overseas and global instability, that's why the market is trending downward.
Okay, so if the Fed is a negative, it seemed like the rally picked up speed yesterday after Mr. Hassett said Jay Powell's not going anywhere. Seems like a sensible thing to say, but I'm wondering why investors took that as such a positive, since they haven't necessarily liked recent action from the Fed.
Well, I think they like the fact that the White House was trying to be more conventional. Look, it isn't really news that a president doesn't fire a Fed chair. It doesn't usually happen every day. And I think what the markets did was say, okay, we're getting some grown-up talk out of the White House. We're calming down some rhetoric, and maybe the market can do its thing. I think that was more the reaction.
Mark, what are our clients doing? You know, are they like, wow, this is a buying opportunity, it's a bear market essentially, or they want to take money out of equities, or they want to shift from bonds, or what are they doing? They're calling you, they don't want to take on more risk? What are you seeing?
Well, that's a great question, and investing is always a custom situation. Younger investors with long-term horizons, people who have had cash on the sidelines waiting for this, are jumping in and are very interested in buying at these discounted valuations. People in that retirement red zone, people over 60, people who've been pondering retirement, they're very skittish, they're very nervous, they want to hold on. And, you know, you can understand that. Investing is important in this regard. You don't want to change your life. You don't want market fluctuations to change your life and your outlook. So people who have a reason to take money off the table, it might be prudent right now to recalibrate your asset allocation. But for younger investors, these are favorable valuations.
The market's now down 7% this year, Mark, and there are worries about 2019, and trade is a big worry. The U.S. is reportedly going to hold trade talks with China next month in Beijing. This coming after both presidents agreed on a 90-day tariff truce earlier this month. The president is all in on let's get China to change their behavior. Do you think China changes? And what happens to the market in the meantime as we wait?
Well, I think they may change, but it'll be incremental, not exponential. So it's an expectation management game. And I think along the way, we're going to see stock market reaction and stock market volatility. If the president can conduct a lot of these trade talks below the surface and not challenge the Chinese in an open forum, I think we'd even have a better chance at success. But for people who think this is going to be a smooth ride and stocks are going to go up in a linear manner as these talks progress, that would be a mistake. I think we might get a favorable outcome, but it'll be slightly less than what the president wants. But the stock market, as long as it's not a trade war and a lot of friction, the stock market may respond favorably.
Mark, bottom line, do you think that the market is at an attractive valuation point here?
Well, I think it's going to be a market of stocks and not really a stock market. But I think when you're looking at a forward PE of around 14, which is less than the historical average, I think you could find opportunities. A lot is going to depend on the competition that stocks will have for cash, which is Fed policy. A lot will come from the uncertainties, whether it's in Europe with their headline risk or from the trade talks. But clearly, if you could isolate U.S. economic performance and you look at U.S. valuations, the U.S. stock market looks to be a favorable place to put your money.
Thanks.
All right. Mark Avalon, thank you so much.
Always good to be here.